and Shakers. I am still joined by the head of Mandiri Institute, Teguh Wicaksono. We're going to talk about the U.S. economy now. Now, last night, of course, the Fed raised its benchmark interest rates by 25 basis points. It was less aggressive, but it was also the eighth rate hike. The Fed fund rate is now 4.5 to 4.75%, the highest since October 2007. Of course, the impact of that rate hike, there's still a lag. So, Pak Teguh, when will the U.S. finally feel the impact of these high rate hikes?
Well, if we look at on the current data, so for instance, like ISM manufacturing report, they show that the manufacturing sector is shrinking for the third straight month. So this kind of indication that the U.S. already started to feel the pinch, I mean, from the rate hike. And also, if you look at on the last, even though the U.S. experienced economic growth, but still slowing down that we might expect, in this the first quarter of 2023.
Right. So the Fed rate hikes, they're already starting to work, in other words, with inflation going down as well.
Yes, yes.
Okay. Now, this is something that many are thinking about. Recession this year. The IMF and the World Bank, they kept on sounding global recession could happen. One of that is also the U.S. There's concerns about the U.S. economy. There were forecasts that the U.S. could fall into recession this year. However, the IMF upgraded their outlook just recently. What is your take? Do you believe that the U.S. will still fall into recession this year?
Well, given the latest data now, I'm not really sure that the US might experience recession. Instead, they might experience slower growth. So the indication can be seen like first they still experience economic growth in the fourth quarter of last year. It means that despite increasing in the Fed rate, economy still grew. And if we look at on the labor market, I think the labor market remains extremely tight with the unemployment rate at a 50-year low.
Yeah.
Job vacancy are still very high and wage growth remain elevated. So with this indication, I think, like first lower inflation and a better economic outlook in the US, I guess the Feds will hope that they can engineering sort of a soft landing instead of pushing the U.S. into recession.
Right. So what you're saying is you do not believe that the U.S. will fall into a recession this year. You do not.
Well, so far with this latest data, I think this is a strong indication that the U.S. may experience a slowing down instead of recession.
Okay. So on top of the labor market and of course inflation, easing continuously since last year, what other parts of the U.S. economy do you still see as being a positive?
Well, some sectors remain recorded positive growth, and particularly the wage growth remain good. But one thing is like it means that when the employment show a good indication, typically the Fed will continue increase the rate. So this is. Yeah. This is important to to align the perception of the markets, particularly capital markets, and also the monetary authority. So I think that's my point.
Okay, now I want to talk to you about the IMF. Of course, last year in the very beginning of this year, they're saying that a third of the global economy will fall into a recession. There was this big concern, but just very recently they changed their tune. The IMF chief saying that things were not as bad as they thought. They also upgraded their global growth outlook to 2.9%. They upgraded their outlooks for China, the US, and others. Do you think that the IMF maybe jumped the gun in the beginning of the year and last year? And were those concerns of a global recession, were they overblown?
Yes, I mean, like it's good news, yeah. I mean, like the global economic growth is forecast at I think 3.2% between the fourth quarters of 2023, and then previously up I think 1.9%, right? So the IMF revised up in the global growth. And if we look at on the driver of this global economy based on the IMF forecast is like China and India. So China is expected to grow by 5.9%, which is huge. I mean, the previously the forecast is I think 2.9, right? So it's
Yeah.
almost double. India is expected to grow by 7%, up from 4.3%. So I think if this prediction is right, I think this is a good sign that the Asia countries will lead the global recovery in this year and probably next year.
Right. Now, before we talk about Asia, I
Mhm.
want to get your more specific perspective. Do you believe that the global recession will, the global economy will experience a recession this year?
Well, uh, my view is like the global economy will experience a slowdown, but it's not as worse as what we thought. Probably in the last year, we thought that the recession will be bad, but it turns out that with this new data and new prediction, I think it's not as bad as what we thought.
Okay. Now, previously you were saying how Asia, economies in Asia will lead growth this year. However, the IMF, they downgraded its outlook for Indonesia and also for Southeast Asian countries. Previously, the IMF said that Indonesia will be a bright spot. Now they're saying, the IMF are saying that global slowdown will outweigh the positive impact of China's reopening. Do you agree with the IMF's forecast? Do you see Southeast Asia being more vulnerable now?
Well, the way I see it is probably the IMF forecast see that if we compare with 2022 and then when we enter 2023, basically we started with a very high base. So I think the slowing down is more reflected because of we already experienced high base and rapid recovery in 2022. And second one, I guess probably because of the external demand. We know that the major of Southeast Asian countries export to big economies, for instance, like the U.S., the Europe. I think they correct the forecast because of this global slowdown might affect the external demand from these countries, including Indonesia. So I think that's probably readjustment. But overall, I think if we look at closely, yes. I mean, in the context of Indonesia, they cut the forecast right from
Yeah.
4.9 to 4.8.
Yep.
So a little bit slower, but still in the positive tune, I guess.
Okay, we're running out of time, but maybe just 10 seconds. I want to get your view. Has your outlook on Indonesia's economic growth changed, and what is your outlook for growth for Indonesia this year?
No. Okay, so I think I'm remain optimistic about Indonesia. First, we experience a solid consumption and spending, and also if we look at on the investment, last year, the investment is like 1,200 trillion rupiah, right? So it's large. So in this year, we see that the return of consumption as engine of growth because consumption already stable. And at the same time, another engine is investment will kick in this year. So I'm remain optimistic about Indonesia economy.
Okay, Teguh Wicaksono, the head of the Mandiri Institute, thank you so much for your insights this afternoon.